Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, as we continue to digest results coming out from the latest earnings season, today we're taking a look at two giants in the conglomerate sector, and we're talking, of course, about Massy Holdings and Ansa McAL. In the case of Massy, for the 6-month period ended March 31st, 2018, the group reported a decline in earnings per share from continuing operations of around $2.52, an 8.7% decline from the $2.76 reported in the prior comparable period. Revenue from continuing operations was a bright spot, up 3.8%, from just around $5.9 billion to just around $6.17 billion. However, compressing margins led to a decrease in profit before income tax of just around 6.8%, from $452 million to around $421.7 million. So Massy continues to confront more challenging operating conditions. The good news is that Massy's profit before tax has historically wavered or hovered within the range of $400 to $450 million for the first 6 months of its fiscal period. And here we can see no major surprises, as integrated retail has been the stalwart for Massy's results, earnings results or profit before tax results. In pink, as you can see, $193.7 million in half year 2017, and stable at around $194.7 million as at the half year 2018. There has been some recovery in the energy and industrial gases business segment, and here we can see in the half year of 2016, industrial gases would have contributed just around $86 million to profit before tax, and that has increased steadily over the past 3 periods to around $127 million right now. The automotive and industrial equipment segment, which is typically described as consumer discretionary, has been under some pressure, falling in terms of profit before tax from $94 million in 2016 to its now current value of $61.6 million in profit before taxes. From a geographic standpoint, Massy remains reasonably well diversified. Two of the most notable exposures in terms of business by geography are the Trinidad and Tobago market, which accounts for just around 45%, as well as 21.1% accruing to the Barbados market. Now, it remains to be seen whether there will be any short-term pressures on the Barbados performance, given the mission-critical plans that have been enunciated by the new Prime Minister of Barbados, Ms. Mia Mottley. One of the bright spots include the Guyana story. Of course, we expect great things of Guyana over the next few years as oil becomes a much more significant component of GDP and overall standards of living in the country. So at a price of just around $47.44, Massy is trading at a price-to-earnings multiple of just around 10.8 times, below that sector average of around 14.2 times. That's price-to-earnings multiple, of course, and a trailing dividend yield of 4.4% is being offered by Massy, above the sector average of just around 3%. So on the basis of reasonably good value, but again, with some short-term challenges to operating performance, Bourse maintains a neutral rating on Massy. Turning quickly to Ansa McAL, and for the first quarter ended March, the group recorded a 2.56% increase in earnings per share from 78 cents to just around 80 cents. And it's all greens across the board for Ansa McAL for this quarter-on-quarter performance, with revenues increasing 7.7%. Profit after tax, of course, didn't increase by that same proportion, just up around 1.2%. And that's because profit before tax margins have been under some pressure. Again, a reflection of a more competitive market in the current recessionary conditions or weak demand conditions in Trinidad and Tobago. And here we can see, while first quarter profits have been on a nice upward trend, as indicated in red, that profit before tax margin, as indicated in by that yellow line, has come down to just around 14.3%, the lowest figure in the past 4 years for this first quarter performance. In terms of profit before tax segment, Ansa McAL's profit before tax contribution from different segments hasn't been as consistent as that of Massy. However, they have gotten the job done overall. As we can see, manufacturing, packaging, and brewing, that particular segment, has had a continuous increase over the past 3 years, from $70.3 million in the first quarter of 2016 to $94.4 million in the first quarter of 2018. On the other hand, insurance and financial services, after having a stellar first quarter in 2017 of 82.8 million in profit before tax contributions, would have declined to just around 54 million in the most recently concluded quarter. So, trading at a price of $59, Ansa McAL is trading at a price-to-earnings multiple of just around 18.6 times, above the sector average of 14.2 times, and is just a shade below the sector average in terms of dividend yield offered to investors at 2.5%, again compared to the sector average of 3%. So on the basis of relatively stabilizing earnings, but by somewhat stretched valuations relative to its peers, Bourse maintains a neutral rating on Ansa McAL. That's it for this week's edition. For more information, give us a call at 226-8773, email us at invest@boursefinancial.com, or visit our website at bourseinvestment.com. Have yourselves a great investing week. This has been the Bourse Report.